Good morning. Continuing the chapter Business Services. Last class we defined business services. Let us recap. Business services provide business enterprises various facilities for the conduct of their activities. They support business enterprises. Basically, here are the examples: banking, insurance, transportation, and warehousing. Okay, so all these services help business houses to remove the kind of hindrances they face. Okay, even communication, like in case of banking, whenever finances are required, business needs funds for acquiring assets, purchasing raw materials, meeting day-to-day expenses, and for all these things, banks support business enterprises. Insurance, it covers the risk like theft, fire, accidents, and by getting their goods insured, producers can avoid the risk of loss of goods. And then coming to transportation, transport through roadways, railways, shipping, airways, all these facilitates the movement of raw materials to the place of production and the finished goods from factories to the place of consumption. Then warehousing refers to the holding and preservation of goods until they are finally consumed. So all these services are supporting business. Then communication, which includes telephone facilities, your courier facilities, then internet, Wi-Fi, all these are what? It will come under communication only as it establishes links with the outside world, like suppliers, customers, competitors. You need to interact with all these people as a business person. And then, of course, the electronic media these days is responsible for this transformation. Now, talking about all these services, we will cover only two main services this year, that is banking and insurance. So let us start with banking. Accompany your parents to bank. What all functions are performed there? People are go there with the money, sometimes to deposit, sometimes to withdraw. We also go there for if you want to take some loan. Yeah, so a lot of facilities or services are provided by the bank. And when it comes to business, banks support business enterprises in a very well spread manner. The products what they have to offer to businessmen, it's very the range is very wide and it supports all business enterprises. Now, let us define banking first. What exactly banking is? So what definition in your book also, you can underline from there. According to Indian Banking Regulation Act 1949, banking means accepting deposits of money. They accept the deposits and then they lend money. Or investments are also done like fixed deposits and other stuff. And then whenever public wants to withdraw the money, it is payable, repayable on demand, okay, or otherwise, or withdrawable. If you have a saving or a current account, you can withdraw using your check. Okay, check facility provides draft or order. So basically, banking stimulates economic activity by dealing in money. Okay, so bank is an institution that collects money from those who have it and lends to those who need it. Suppose Krish have some extra money and he wants to put it in the bank for his safety and to earn some interest on it. If he keeps this money back at home, it's not going to help him in which ways. Okay, so to earn some interest on the cash what he has, he can deposit it in the bank and earn interest from the bank. Now, he is earning interest from the bank. That means bank has to pay him because he's keeping his money with the bank. Okay, and now let's say Sahaj. Sahaj wants some loan for meeting his, maybe he wants to buy a car, or he's looking for some money. Okay, maybe he wants to start a small business and he wants some loan from the bank. So he will approach bank and bank will give him loan. Again, he will pay interest back to the bank. So the difference, see, when bank gives interest, suppose Krish is kept 1 lakh rupees and 10 bank is paying him 10% interest per annum, and Sahaj has taken a loan, but bank is charging him 12% interest. So the difference of 2% is the bank's income. Okay, so bank is not a charitable organization. They are there in the business of banking. Okay, so this is how they make money. This is a basic banking, how all banks make money. And there are other things also bank also does investment, there's fee income. We'll talk about it. Okay, so this is what the definition of banking is. Now talking about types of banks. Commercial banks, cooperative banks, specialized banks, and central banks. These are the types of commercial banks. What banks we usually see? Okay, what they do, institutions dealing in money and credit, and they're governed by Indian Banking Regulation Act, as in the definition also I told you, 1949. Now types of commercial bank, one is private sector, one is public sector. Private sector, which is comes under government, private under private people. Now, public, owned by the government, SBI, Canara Bank, Bank of Baroda, all these are examples of these. So, these public sector banks, the government has a major stake. They mainly emphasize on social objectives rather than profitability. They just don't look for profitability, but the social objective is the main agenda. And in case of private sector bank, ICICI, Mahindra, HDFC, all these are private sector banks. In here in 1969, 14 banks, this information I wanted to share with you, 14 banks were nationalized by Government of India. And in 1980, another 6 banks were nationalized. So total 28 public sector banks are there in India. Talking about private sector, owned by and managed by private parties and also governed by RBI only. Free to develop their own policy decisions regarding banking operations, right? But they have to follow the guidelines of RBI. Now 34 private sector banks are there in India, IDBI, ICICI, these are the examples what you can see on your screen. Now cooperative banks, banks organized based on cooperative principles. Okay, they are governed by the provision of State Cooperative Societies Act. It is an important source for rural credit. Basically, these small cooperative banks help the farmers, or maybe in they are more prominent in small cities. Specialized banks organized to render specific services to the public, like foreign exchange, industrial bank, exim banks, where export import transactions and all those things are done. Central banks, each country has its own central bank. Like in India, we have Reserve Bank of India. Okay, and it's a banker's bank, and it controls and regulates the operations of all commercial banks in the country. Banker to the government and controls the currency and credit policies of the country. So all these are the function of central bank. And in India, Reserve Bank of India is the central bank, and it was established in 1935. That's it I wanted to cover today. Hope you have understood. Thank you.